Hello and welcome to Chart of the Day Cafe for Thursday, February 4th, 2016. Just going to read our disclaimer quickly. Trading stocks has a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So we've been starting our videos off with the monthly time frame on the Russell. We use the Russell as a simple proxy for the overall market. I want to keep these videos short and concise, so I pick the Russell as my major index to keep an eye on as to market health and direction. So we're looking at the 5-year monthly chart. First thing you want to notice is the beautiful uptrend that the Russell was in 2013, the consolidation that took place in 2014, the lift up and out in early 2015, and then the sell-off that ensued that brought us right back to where we are now. This channel seemed important to the Russell, so we've been really keeping an eye on it. I'm going to move it away now from the monthly, but before I do, I just want to say it seems somewhat encouraging that the month of January, so this is the month of January candle, has a long wick where the bulls came in down here and started to push price up. So here's where we are right here, right now. It's early in February. It's starting to look a little bit encouraging. You still want to be super cautious, but perhaps price might want to move back into our channel and resume a little bit of an uptrend, in which case we will be starting to put new picks forward. But until that happens, we're just going to stay looking at some of the old charts that we've put forward in the past. So here's the weekly chart of the Russell. So the last couple of weeks look kind of encouraging. This is the week so far. It's Thursday. So we'll see if we can get this looking like a healthier candle like these ones do in the next couple of days to bring it into a more bullish looking setup here. And then when price is up and over this 8-day EMA on the Russell, so what we're looking for is a look something like this, and it's moving upwards, we'll start putting new charts forward. But until then, it's going to be challenged when it gets to this underside of this channel. So we're going to be cautious and careful. But having said that, let's take a look at the daily. So you can see this is kind of encouraging to me. The consolidation that's taking place here yesterday was encouraging. I'm filming this at about 7 o'clock on Thursday morning. It's a little earlier than I normally film, but the futures are up. There are some job numbers coming out at 8:30 this morning you might want to be careful of, but if we do get some follow through from yesterday and some up and out here, it's going to start to look kind of encouraging on the Russell. So with that, I will put a couple of charts in front of you that might be worth taking a look at. So you know what, Chart of the Day Cafe, it's all about price being up and over the blue line, the blue 8-day EMA. So we're looking at Skyworks solutions. I know the candle is red so far, but we're at an area where if the markets do pick up, this is a very undervalued stock. So the RV score on it, relative value score, is 1.64, which means it's trading at around $66, but it is worth $135. So it's a real value pick. It pays a dividend. The dividend yield is 1.57%. And it's got a forecasted earnings growth rate of 28%. So what I'm saying is, should the market start to pick up, I would expect Skyworks to start trading up and over that blue line and this area here in a solid manner. You can already see the volume starting to kind of slightly tick up here. So I'd be looking for a bullish candle that pulls us up and over this area, and we're past earnings. So we will get a trend that will hopefully continue. But it's all about price being up and over that blue 8-day EMA. The other one that I wanted to point out for you is Gilead. Just as a point of reference, we highlighted this one way back here when Gilead was breaking out of this wedge pattern. And so these are weekly candles, so it had a really nice run up from this area all the way up here. But because these markets are so choppy, I really truly believe in this 8-day EMA, and you want to make sure that price is always underneath it, and when it isn't, not interested anymore. Why would you want to hold it all the way down to here? So we're coming into an area of pretty interesting support. So far, the weekly candle on Gilead looks pretty healthy. We're past earnings. I'm going to pull it away from the 2-year weekly to the 9-month daily so you can really see Gilead looks as though it wants to cross that 8-day EMA and move into a more solid price pattern this way. Again, Gilead value score of 1.59. So it's currently trading at about $86, but worth $176. It has a dividend yield of 1.99% and a forecasted earnings growth rate of 24%. This would be a nice one to look at. Again, can't emphasize enough. Only when price is up and over that blue 8-day EMA. The last one is Disney. Prior chart of the day cafe pick, like the way it's consolidating here. Should the markets start to firm up, it looks as though it wants to trade up and over that 8-day EMA and move this way. So it's all about price staying, below the blue line staying below price. But I wanted to highlight Disney for you because it's got so many growth catalysts. The Star Wars movie, some parks opening up in China in the spring. Value score of 1.39, so it's currently trading at $95, but it's worth $121.65. Forecasted earnings growth rate of 15% and a dividend yield of 1.49%. So I just wanted to highlight those ones for you. Be careful, be cautious, and we will put out a video next Tuesday. Thanks very much.